Hello and welcome to another episode of Monday Markets. As always, we're brought to you by Woo. Links available in the description below. Please read the long form article before engaging with any exchange. And if you sign up for any exchange, make sure you only keep the funds that you need for trading there and not a single penny more. That's the whole point of leverage. It allows you to trade your normal position sizes without having more counterparty risk than you need with any single centralized actor. It applies to Woo, it applies to all the exchanges. It's just smart money management. So with that out of the way, thank you for the support on the channel recently. Lots of new subs, likes, comments. I think we have a pretty robust community now, and we're grateful for it. And hopefully, even amongst this volatility drought in centralized exchange trading, we can keep providing you with some decent commentary, trade ideas, and analysis. So let's try to do that now, despite market conditions. On the monthly time frame, I'm still not entirely sure how relevant this time frame is going to be. I'm going to give it a chance. So the monthly close is happening tonight, basically. And I think the relevant monthly levels as far as current price or what's close to price are the top of the range at 29.2, 29.3, and the bottom of that same monthly cluster at 27.2. So $2,000 range there. I think I want to see more evidence if it's going to be relevant at all, because we're just a bit too close. Normally, if we have a sort of range, right, a consolidation, and the market breaks out of it, it becomes a relevant level if it comes back, but this impulsive leg to move away from the level is very important. On this occasion, we sort of got stuck, essentially, not particularly far from the level, so my confidence in this being support is lower. Thankfully, I don't have to make that determination on the monthly time frame because those same 29.2, 27 odd levels show up on the weekly and daily as well. So as far as the monthly goes, no strong views, but developing situation given it's a bit ambiguous. The ambiguity is in the fact that this would ordinarily be monthly support, but the case for it being monthly support is weaker because we didn't really move away from it and have a bunch of follow through on this kind of ETF month. So that's why it's a bit of a mixed bag, and that determination will have to be made on slightly lower timeframes. Speaking of slightly lower timeframes, the weekly still looks weak. I don't think there's a whole lot more to it. We've essentially been drifting now for the past few weeks. It's one of those situations similar to this drift that we had in sort of April to June, where the market wants to call it chop. Instead, it's making lower highs and lower lows, which is more akin to a downtrend than chop. On this occasion, we're very much early into the break from the consolidation, but generally speaking, lower highs and lower lows as well. So the weekly time frame doesn't look too great at the moment. I think the line chart, if you're not convinced by the candlesticks, can also make that case, but no super strong views. I think the overarching picture is they got stuck at 30K and has been moving lower ever since. So what are the relevant weekly levels? I think given this is a weekly show for our purposes, there are two. The first is this shallow pullback level 29.2, 29.3. We had a decent weekly close above it, actually, so we'll kind of come back to that in a moment, but that's the first level. And the other level is essentially the pre-breakdown range that then got blasted through. So if you look at where market structure shifted, and this is something I do when I look for levels in general, sort of, you know, high, low, lower high, lower low, lower high, lower low, but then instead of another lower high, the market actually made a higher high on this weekly. So then you can ask yourself, what was the last lower high and lower low before the market structure reversed? And then you can land at pretty reasonable and important levels. So for our purposes, if we take that as a range, we have the shallow level at 29.2, 29.3, and then we essentially have the pre-breakdown range or the pre-market structure shifting range with a range low at 26.7 and the top of that same range at 28. So again, this was just the weekly consolidation before the breakdown and then market structure shifted, which gives it sort of contextual relevance for our purposes. So again, I'm sure if Don were here, he would say that this is all garbage and that the only supports that matter are sort of, you know, ETF candle retrace, and then it's going to, you know, potentially go a lot lower, and it's close to 20K, 22K that he was discussing. But given this is a weekly show, if the market chooses to go that way, we'll have plenty of time to talk about it. For our purposes, we have to trade today's market, and I think these three levels are satisfactory for the time being. Now, as far as where we are right now, the weekly close was acceptable. It was okay, actually, because it closed above the shallow pullback level. I still have sort of contextual fears around this level because it just seems too close to 30K. If the market is going to be weak, then it's very hard to argue at the same time that 30K is strong resistance, but 29K is strong support. Those to me are contradictory ideas. If either 30K can't be strong resistance, in which case a shallow pullback holds and that's bullish, or 30K is strong resistance, in which case it's unlikely that a support $1,000 lower is going to reverse the market. So that's the sort of friction there. I do think from a short-term trading perspective, given how this weekly closed, there could be a bounce if this week is supportive. One way that might look is if we trade below previous week's low and end up closing above that same 29.2 level, that would be a good sign of absorption. Alternatively, again, if this sort of Monday weekly open rally gets reversed and we start trading back above the weekly open, which would be here. We're just going to mark that out in a different color to make it visible. Let's make it purple, very important part of TA. You know, if we get a further flush out through some of these lows into the range lows, we've already kind of had that, but essentially if the market doesn't dump and holds the range low and eventually makes its way back above the weekly open, we can then make the argument that the sort of Monday dump into a weekly level after a decent weekly close was a bit early, and that was just aggressive participation that was unrewarded, and then maybe the sort of participants who are getting aggressive at these prices get squeezed, you know, towards something conservative like the top of the range, 29 odd, maybe 30. So that's kind of a very short-term trading idea that's on my radar, that if this selling doesn't have continuation and the weekly close starts to shape up well above 29.3 and gets above the weekly open, that might be reasonable. But again, bigger picture zoomed out, still not the best level in the world given how close it is, but I think it's worth having an open mind towards it. Yeah, and as far as the other weekly levels go, before I jump to the daily, I think the 26.7, 28k level is fairly self-explanatory. If this market has any hope of looking bullish and maintaining essentially this post-impulse candle trading range, then that has to be the higher low, right? If we take a slightly zoomed out perspective, where we had a weekly break of market structure on the violation of this high, continuation, and then it's sort of, you know, we had a downtrend drift, and then another higher high. So if you take a very recent price action, I'm sure some people will protest at this being a higher high, which is completely reasonable. But at the very least, if you view it that way, or give it a chance to even develop a bullish trading range, even if you disagree with the market structure argument, the only reasonable area for the ETF candle to be protected would be a higher low in the 26.7 to 28k area. Regardless of how you want to frame that argument, whether it's defending the ETF candle, whether it's the bullish part of the trading range, whether it's market structure for a higher low, all of them lead to the same conclusion that if 27-ish, just splitting the difference between the two levels, fails, then it looks bad. Because all of those arguments go out the window because the ETF candle has been retraced, and that would be a lower low, and the trading range would be breaking down, which is why I think this is a very contextually important area. We discussed it at length on Casual Friday, essentially wrestling between the ideas that yes, it's a good technical level, but if the ETF market buyers and news buyers get spooked, then there's not going to be a lot of available liquidity, and they're all going to be puking at the same time, which can often lead to overextension, liquidation cascades, all that type of stuff. So it's one of those levels that technically makes sense, but contextually you'll probably have to be at your desk and looking at the low time frame, open interest, all that type of stuff to get a setup as opposed to trading it blindly. So that's really the weekly time frame, I think, for our purposes, and certainly in time for Casual Friday and the newsletter, and hopefully in time for next week's show. These are the three levels that make sense to me. Now, the daily time frame, I think, sullies this view somewhat. I think it's reasonable to look at 29.2, 29.3 to see if it's going to give that type of bounce. The reason I personally don't like it, surprise, surprise, is because this daily level, because of this daily level that we spoke about at length when we were discussing the potential for a shallow pullback before continuation, and that comes in at around 29.4. You could always splice it up in another way. You can take this lowest close, but it all ends up at around 29.4, 29.3. And essentially, that's what the market is retesting as resistance right now. And that's what's been giving us a lot of problems ever since we had the breakdown from 30K. So that's why the bullish trade at these prices is just so tricky, because you essentially have two barriers. The first barrier is, as mentioned, the 29.45 level itself, which is this big daily resistance that was held for a while and is now flipped. So that's kind of in your face. And then you might think, okay, but if that's resistance and then it breaks, then surely there's a reclaim reversal trade available there. Under ordinary circumstances, yes, but you have to look at what's above us. Because if the market were to do that and flip this daily level 29.34, you know, finally we get a daily close, you know, maybe a flush and then a close above, and that starts to look constructive. I agree from a short-term trading perspective, anyone that gets overly aggressive and absorbed through that level will start feeling the heat if we trade above it. The problem is if you're positioning for a trade as a sort of follow through to that move, you essentially hit your head immediately against the 30K resistance level. So by definition, there just isn't a lot of space from the higher time frame perspective between overturning or flipping the most overhead level and then the next level of resistance. Normally, if you have resistance and the market breaks it and you're looking for long setups, you want there to be a lot of space between where you're looking to get long and the next high time frame level that sort of you have to manage or take profit or do whatever. In this case, flipping 29.4 or turning the nearby level from resistance to support doesn't help you all too much, because immediately you have another obstacle in the form of 30k. That's what makes that trade a bit tricky, but certainly from a short-term trading perspective, there might be something there. I'm just trying to sort of explain my reasoning as to why I have doubts around 29, because even if it turns out to be bullish, it's just a very tricky trade to structure, because as soon as you're out of the woods, proverbially, through this level, you have another one sitting right on top of you, and this just isn't enough space, I think, from a high time frame swing perspective to be attractive. And even that at the moment is a counterfactual consideration, because this resistance is very much in your face for the time being. So this is what's sort of most pertinent on my trading radar for the time being. No, not a whole lot of reasons to go down to the 4 hour. We essentially developed a new trading range. I think the range high is quite well delineated by this daily resistance at 29.4. And if you want to get a range low, you could just map out the local lows essentially at 29k, and this is what we're dealing with. So yeah, I think that's a decent market map for the time being, and hopefully that makes sense for BTC. I think in general, it makes sense to be a little bit patient. Above 30k, it gets clearer. Lower down at more sort of structurally significant supports, it gets clearer. Here, we're kind of just drifting on the weekly and might be picking up a bit of speed after breaking down from 30k. So I'm not a huge fan of that whole argument of 30k is strong resistance, but 29k is going to be strong support. It could well be in terms of short-term trading, but bigger picture, swing-wise, I sometimes got to let the market do its thing, and its thing at the moment seems to be turning from 30k. So I'm going to let it do what it wants to do and pick up the pieces if and when the time is appropriate. But hopefully those nearby levels make sense for anyone short-term trading. As far as ETH goes, similarly agonizing. Not much to say, really. Same old argument as before. You're probably very tired of this. So are we, and so am I. Not just the voices in my head. I meant Casual Friday, but it's just me today. 1935, weekly resistance just keeps stuffing the market. Weekly close, nothing consequential here. You could make the argument that it sort of spiked previous week's low of an inside week. Could be a short-term bouncy argument. I'm not entirely against that, but contextually, I mean, just looking at this daily chart, I just have no interest in touching this whatsoever. I would be very hard-pressed. I mean, if we zoom in and forget TA and levels for a sec, I mean, this is what we're dealing with, right? 1, 2, 3, 4, 5 weeks of a range between 1900 and 1860. I mean, it's completely miserable. Anyone spending a lot of sort of brain share on mind space on this, I think that it's an unforgivable waste of your time at this stage. You just want to see volatility expansion. And in general, liquidity is crap and volatility is low. That means you're going to get eaten up by fees if you're trading with any amount of sort of discretionary clicking styles. So that's just not great. I need to see this thing move, and it hasn't moved. I guess that would be the one-line summary for this video if I didn't have to make it slightly longer and hopefully share something useful. But yeah, I would say the situation is also not aided by ETH BTC. It certainly looks slightly better than it did before, but bigger picture, it's still very sort of downtrendy. It seems like after breaking market structure here, we essentially just sort of entered a new range. So that's what we're dealing with. Even if this pushes higher, it's still within the confines of this kind of broader consolidation, and that doesn't make it any more interesting necessarily, at least not if the ETH USD pair is just doing absolutely nothing. So yeah, no real interest in ETH, to be completely honest with you. Even in altcoins, trust me, I tried. I've clicked through all of these looking for things that looked remotely interesting or relevant. But to be completely frank, the state of the market is such that no one cares at the moment about BTC, ETH, and the top 50, top 100 alts. Whatever speculation there is happening in the most degenerate form on-chain, Base, Bold, and other meme coins seem to have the majority of the market share. So if you're sort of small, limber, and savvy on chain, it's a good time for you because you're certainly not missing out anything in the majors. For me and my system, which is mostly BTC and ETH oriented on a sort of medium frequency and swing as far as reasonably possible, with some short-term trading, there just isn't a lot going on and hasn't been, certainly not for the purposes of a weekly show. I think I've tried to outline some arguments as to what to look for this week, but bigger picture, zooming out, this thing kind of just broke down 30k and is just ranging again, and that's not great. And same with ETH, it just hasn't moved in over a month. So just want to keep it frank and candid with you. When people make trading content for videos or tweets or whatever else, a lot of the time they are incentivized to present the idea that there's always an opportunity in the market, because that usually directly benefits either their ref link or just their sort of social media presence, engagement, impressions, or whatever. I think for those who've been around for a while know that's not entirely how we operate. If the market's boring and there's not a setup or a good edge there, we'll mostly express that. And I think bigger picture, that's sort of what's going on at the moment, at least within the confines of my system. But I've tried as hard as I reasonably could, given the market circumstances, to outline some nearby levels that could provide for interesting setups. But bigger picture, it's not that interesting. And the speculation just isn't here at the moment. So I hope you've been using your time well. You know, call your parents, tell them you love them, spend some time with friends, maybe go to the gym. I'm sure there are marginally more productive things you can do if you're not an on-chain sleuth. Because again, to be perfectly candid, there have been a ton of opportunities in this market, certainly more on the trading opportunities more generally, like on-chain. And if you're really willing to get into the trenches of the casino, I'm not going to be that guy who watches on-chain stuff go wild and say, oh, touch grass, nothing is happening. I think that's just an indication that there are sort of venue preferences, for lack of a better term. You know, like this, when the big caps are moving, big cap traders feel like the market is very busy, and if you're on chain, maybe it's less active. And it works the other way around as well. You know, you're telling, if you're a big cap trader in these conditions saying, oh, the market sucks, the on-chain guys are laughing at you because they're having a field day. So it's all about perspective. And this show in general, and Casual Friday and Monday markets and Technical Roundup as a whole, focuses on big caps and higher time frame ideas. And that's just not the regime the market is in at the moment. Still, thank you for your support on the channel, and hope we can provide you with decent analysis. Maybe if you want to see some educational stuff, we can do that as well. Although as soon as we'll do that, volatility will pick up. But nonetheless, leave us some comments, leave us some ideas. In the meantime, I'll leave you to it. Thank you for watching. Thank you to Woo for supporting the show. And be sure to check them out in the description. There are big changes coming, not in the cringe influencer type of, big week, please use my ref link, but genuine kind of structural shifts to the exchange that we think are a net positive, and we look forward to sharing those with you. Anyway, that's all from me. Enough babbling. Hope you all have an excellent week, and I will see you for the newsletter, Casual Friday, and all the normal good stuff. Thank you. Goodbye.